Good morning, good afternoon, and good evening to everyone joining us from across the globe. And thank you to the Center for Financial Inclusion for inviting the Superintendency of Banks of Dominican Republic to be part of the Financial Inclusion Week 2025. I am Ines Paez. I am the Director of Financial Inclusion and Financial Innovation within the Superintendency of Banks. Today, we will be talking about how financial innovation can drive financial inclusion actually in Latin America, but in any other country. According to the latest global Findex data, for Latin America and the Caribbean, about 73% of adults now have access to an account with a financial institution or a mobile money provider. This is up from roughly 55 in 2017, making it one of the regions with the fastest growth in the developing countries. Digital financial transactions are rising too. On average, nearly 49% of adults in the region report having made or receive a digital payment in the past year. It's from about 36% from years ago. So these are gaining importance, but also these highlight that large portion of low-income households, people in rural areas and informal sectors are still underserved. This year, the topic building resilience and well-being during rising uncertainties is it's really timely because across Latin America and the Caribbean, as well as in many other parts of the world, households and businesses are facing complex and overlapping challenges. And at the same time, we are seeing extraordinary opportunities to rethink the role of financial services in helping people, not only with stand shocks, but also to move forward. And here I will share some of the challenges that we have to overcome. One of them is the access gaps. Despite the progress that we can see in the global Findex, there are millions of people in our region that remain unbanked or underbanked. Rural populations, informal workers, and women are still disproportionately excluded. High cost traditional banking products often carries fees or requirements that are simply not affordable for those living or on low or irregular incomes. The informality, small businesses still rely on heavily on cash. Without digital records, they are invisible to the financial system and cut off from credit opportunities. We have to mention the lack of trust. Many low income still distrust from financial institutions. They prefer cash because it feels tangible and they feel safe as well. I have to mention the digital divide. There are connectivity barriers, digital literacy gap, and the cost of the smartphones is still it's a limitation to access digital solutions. And according to the United Nations statistics, there is 75% of urban households that have internet versus only around 36% of rural households. We have a gap that we are still need to work on. Last but not least, we have to mention the fragmented data. Even when people use digital payments, that data often remains isolated and cannot be leveraged to unlock access to better financial services. These challenges illustrate why uncertainty so often translate into vulnerability for low-income households and MSMEs. The good news is that we have opportunities in payments. In the regions, we have seen remarkable progress in payment innovation in the recent years. We have digital payment as gateways, from wallets to QR codes, instant payment platforms. Digital payments are becoming the first step for many into the formal financial system. We have lower cost, higher efficiency. These digital rails reduce the transaction cost, making it cheaper for micro and small businesses and household as well to make transactions and cross-border remittances. Innovation in payments are reducing the cost and broadening reach. And this is especially important in Central America and the Caribbean, where we receive a large volume of remittances and that a significant part of the population depend on these remittances. We have to mention as well the woman empowerment. A digital payment give women greater control over their resources, making transactions safer and more private. We have a regional leadership, global leadership. There is Brazil with their PIX solution. There are reference in everything related to instant payment and how we can scale that massively. Since its launch in late 2020, the COVID pandemic has made an important role on the massification of pigs because we already have more than 70% of the adult population that are registered users of pigs. They are processing millions of transactions per day. It's not just individual users, but they have as well around 19 million businesses that are using as well this platform, making around 64 billion transactions in the closing of 2024. They have own bank population that has dropped significantly thanks to the to pigs. They have around 70 million people that have engaged for the first time with digital transfers using the Pix platform. Businesses, they have seen an increase in revenue around 16% and around 25% growth in volume of clients that they had previously when they were offline without Pix. Pix is working with fintechs. So we have seen in Brazil that the number of fintech startups has quadrupled over the last 5 years since they started using Pix. Many of them are addressing the underserved and or unbanked populations. In Mexico, we have CODI, which is pushing QR codes based transaction, and as well they have another new model, which is mobile money demo that is pushing payment using the mobile number of the user. Similarly, we have in Colombia Breve. Breve is using both QR codes and mobile number for instant payment. And then we have across Caribbean and Central America as well, wallets that are growing really fast. These examples show us that when we design services with inclusion in mind, payments innovation can build resilience and unlock opportunity. In these countries that they have implemented instant payment, they are really getting into this underserved population. And there is another opportunity as well, besides the payment innovation, which is the open finance, like the next goal, the next frontier that we have to get to. And briefly defining open finance for those that maybe are not familiar with the concept. Open finance is data sharing frameworks that facilitate innovation and consumer choice. Data can be securely shared between financial institutions and authorized third party, always with the consent of the user. Data is now an asset. By allowing consumers to share their financial data securely, we can help those that are traditionally without credit history, that they can access loans, they can access saving products and insurance using alternative credit scoring. For example, how they use the mobile phones and utility data to expand their access to other financial products. We can have new business model. Open finance enables fintechs and traditional banks to collaborate, creating new services, as well as small fintechs and providers can offer services to those that are overlooked by traditional banks. We can manage hyper personalization for services. Imagine, for example, a product that can adapt to a gig worker's irregular income, made possible that through data-driven design, we can create more products and services. It can empower the consumer by gaining visibility of their financial data and access more tailored services. And as well, resilience tools from microinsurance linked to digital payments to emergency credit activated by transaction patterns. Open finance can provide safety nets when family need them the most. In Dominican Republic, for example, we are exploring how open finance can empower micro and small entrepreneurs by allowing their transaction history to speak for them and giving like a passport so they can access to credit. I'm sure that open finance will help our countries to create more opportunities for these populations. What can we do with all this innovation? How can we ensure that this innovation can build resilience on our populations? And given the challenge that I already mentioned, here are some of the priority levers that I think we have to check to expand real-time, low-cost payment rails, such as instant payments, as I mentioned in Brazil, Colombia, and Mexico, and mobile wallets, so that more households and small businesses can transact digitally, send and receive income or remittances quickly, especially in the case of any emergency, as well as if government to person, the G2P payments, are delivered digitally, it will be more quickly and it will be more low cost, and we can protect maybe families during crisis, during time of crisis, because it will get directly more quickly, and it will be better for the government to disburse all the subsidies that they give to the families. Another point is the inclusive product design. We have to be more user centric, low cost, more transparent, and we have to tailor these products and services to vulnerable groups like elderly, women, persons with disability, and MSMEs. This could mean, for example, a small ticket saving, flexible repayment schedules, or microinsurance, for example. The uses of data and open finance for inclusive credit. We can empower low income users by enabling fintechs and banks to use another kind of patterns on digital payments, receipts, invoices, for example, mobile money, to build new credit scoring models, help with digital identity and KYC services that can be more flexible and can adapt with these new products and services to offer more through the digital channels. We have to work as well with financial literacy and to trust building. Technology must go hand in hand with education, communication, so people can feel confident using digital services. We have talked previously about the digital divide. That's something that we need to work on, make a focus on that. So we have to develop financial digital literacy because to help these populations in order to be able to use these digital financial services, to enable regulation and work in collaboration within the ecosystem. We, as regulators, we play a key role. We can develop regulatory sandboxes. We can develop open finance frameworks, protection for consumer data, incentive for financial institutions so they can serve low-income groups, to support interoperable instant payment. There is no one single actor that can do everything alone. We have to work together as an ecosystem, banks, fintechs, regulators, and developers, so we can create together solutions. So let me close with a thought. Innovation in payments and open finance, as I mentioned, if it's designed with inclusion in the center, can transform uncertainty into opportunities. If we put people in the center, their needs, their realities, and their aspirations, we can make that payments and open finance become more powerful tools, not only to expand access, but to build confidence, security, and the long term well being that we want for the vulnerable households and business, MSME, and especially. My ask today is that we commit in pushing forward for every country that is connected here, every financial institution, and every regulator to ask not just how we innovate, but how do we innovate inclusively? That is the opportunity before us, and we invite all of us to embrace it together. Thank you very much for joining.